James, welcome back to the podcast after being in Dallas for our IMB Summit. Flying home, we're doing this at like 8 o'clock at night, but we're so excited. We can't wait to do it.
Yeah, it's almost 9:30 for me, actually. I just got back from LaGuardia Airport. And believe it or not, even though I've worked at HousingWire for more than 4 years, it is my first time visiting the headquarters in Dallas.
That's wild.
Yeah. And I had a very weird Uber ride that we talked about. And I got a whole tour. And I was like, is this whole place just a big highway? And everyone's like, yeah, kind of. It kind of is. So.
Yeah, especially you were telling me where you are, and I was like, okay, that's not from the airport to the office at all. You were like going to different, suburbs. I was like, Well, I'm so glad you made it. I mean, you did come on during the pandemic, so I mean, the part of that is like, and then you've been having small children, you've been having babies since then.
Yeah,
too,
I mean, that was dumb of me. I shouldn't have done that. So.
Oh, no. Okay, well, let's talk about the IMB Summit because I thought it went really well. And I thought that, wow, it was just so amazing to have that many leaders in one place. And I feel like the conversations we had on stage and the conversations we had out in the audience and, in the times that we had the cocktail party and the lunch and stuff, I thought it was great. So would love to kick off maybe with what you saw. You got to be, in the audience for some of it, and then you were on stage too.
Yeah, really, really got to do everything. I think there were a lot of just in tone. There was a lot more optimism than I have seen in a lot of conferences, and I travel a lot. Not as much as you do, Sarah, but I hit up the conference scene pretty hard, and this is definitely the most optimistic that I've heard people. Of course, this is also after a month of mortgage rates in the low to mid sixes, and for some products, even in the fives. And hey, look, if you can convince a borrower to buy points, like you can get them down in the fours, right? You get a 2-1 buy down and suddenly we're at like 4.4%, right? So definitely, I think people felt like we're kind of beyond the worst of it. And there's going to probably be another, 50 basis points in Fed cuts in 2024 still to come. And then maybe 100 more in 2025. And so even though the market has already priced in a fair amount of those cuts, I think if you're looking at the numbers, you're thinking, I can probably up my percentage of refi business from 15 to 20%, maybe to 30, 35%. And we saw the MBA statistics, a week or two ago, it was like 52% of the mortgage applications, I guess about a week ago, were refis. And so that was a lot of the conversation that I heard. I talked to a guy, he's a really well-known mortgage coach. And he was saying, look, so many of these people get the mindset wrong and they think of it as like, it's about rate. And look, rate is important. I don't think anyone who's honest about how the mortgage business works will say that rate doesn't matter. It does, right? But I think people get too fixated on the rate and make it a competition and forget about the borrower's situation, right? So maybe that borrower has a junior in high school and they're thinking about college and they can lower their payment by pulling out some equity and they can reduce their payment from $2,800 a month down to $1,400 a month. And does it matter if the rate is 5.5 or 6%? If you're saving $1,400 a month and you can put that toward your daughter's college fund. I mean, and look, and that's going to change based on the borrower. But I think a lot of it was conversations recognizing there are a lot of different borrowers who have a lot of different potential outcomes here. And we need to get better about communicating what kind of value we have and how we can be a shepherd for them on this journey. And there are a lot of people who are going to be in the money if they're not already. And we also need to figure out how do we put them into the best situation possible for their family. And by the way, it's a lot easier to do refis than most purchase mortgages, right? So it's definitely a lot of optimism that I didn't hear in previous conferences.
No, I felt the same way. There was a lot of just momentum, the vibe, right? We talk about, more data, less vibes, but the vibe was really good. It was really fun. Sean Panosian, number one LO in the country, many, many times. I heard so many people, his session was just a favorite. People were just amazed. Just the way he can motivate people, and he's just down to earth and being like, "Hey, I worked harder at this time than this time. This is what worked for me." He's just very genuine for someone who has done so much and been so successful. And everybody I talked to was like, when I was like, "What'd you like?" That was almost number one.
People love Sean. Yeah, it's also, for starters, usually when you're the big, the number one in any field, often like there's jealousy, there's a target, people. But I've never spoken to anyone in this entire industry who's ever had a bad word to say about Sean.
It's
Even if,
true. It's
yeah, even if like
crazy.
they don't like, the setup that he has or this or that or whatever, or, like no one has ever said like, oh, you know, Sean's really not what he presents himself to be. Like that's never, ever, ever happened. So yeah, I think his presentation was really interesting because there's no secret sauce to being the best loan originator in the country. A lot of it is, one, get in when it's hard. You put in the tough work in 08, 09, and you gradually build and you have a good process that you repeat, and that you focus on the borrower, you focus on the experience. You don't think about TRID, you don't think about what your LO comp is on each deal. Like you focus on growing the business gradually. And in 18, it's a down year, right? Rates go up and things aren't as great. And then 19, you double your volume, and then you're able to parlay that into, I mean, I think he did what, like 4 billion in total during the pandemic, like
Yes.
stupid, stupid,
Crazy.
stupid numbers, like stuff that like literally more than like fairly significant IMBs unto themselves, right? And then you don't work the same cycle in 2023, in 2024. You need to reimagine your business. You have to kind of reinvent yourself, right? So you have to be flexible. You have to be, um, a different LO on some level, right? At least your business, your entrepreneurial focus has to be different depending on the cycle, because markets change and people's circumstances change with it, right? Like if you treat borrowers like you did in 2021, you probably suck at your job now, right? Like you're probably not very good at this, honestly. So yeah, I mean, he also had some, I think, pretty insightful mentality
Yep.
monster kind of thoughts. Like basically, he trains professionally like a professional athlete does. And obviously, the contours of those jobs are very different, but I think the approach can be very similar. How do you be a high performer in any industry? Well, there's a lot of repetition, right? There's a lot of organizing your brain around process and making sure that you're in a good mindset to do the work that you need to do at a really high level, and that you're providing really consistent service. If Shant is giving bad service to even, let's say, 50 out of, I don't even know how many it is, but like, let's say the 3,000 borrowers that he's going to do this year. I'm just making up a number because I don't know exactly what it is. Even if 50 of them have a bad experience, the reputational risk for someone like Sean is so much greater than it is for somebody who does 15 loans in a year and two of them didn't go very well, right? So you have to think like you're an elite performer at the work you do. And part of that is having a healthy work-life balance to the extent that you can, right? And making sure that you're healthy and that you feel good in the morning, that you're refreshed. And I think a lot of that is really, it translates because everyone can take something from that. You don't have to be a rainmaker in mortgage to know that, if you have a good consistent process, you treat yourself well, you treat your clients well, you adapt, and you think about adding value regardless of the market, regardless of the cycle, and you just keep doing that for a long time, like you'll be pretty good at this. I think you'll be successful.
I think so too. And resonate is the right word. People resonate with that. You know what? Another great single speaker was Tyler Osby
It
from
was so good at Fairway.
Fairway. Yes. In
Yeah.
fact, when we had the planning call, he was like, "Hey, listen, can I talk about this from the stage?" And I was like, "Yes, you can." And don't want to give it too much away. People should go
No, give it
watch
away.
it.
It's so funny. It's such an awesome speech, because, or presentation, I should say, because it's surprising, right? And like the best narrative is always it's got a hook, right? And
Yep.
Tyler's pretty sharp, and early in the presentation he said, this is a this is a mortgage story about my vasectomy.
Right.
And like, how do you not stick through that, right? But it's also it's a lot of really, really practical stuff. It's
Yeah.
the idea that um, this is a reputation based consumer world now, and people put a lot of stock in ratings and reviews, and it's a badge of what you did, right? It's really kind of the best way to show everyone who might think about using you or might think about someone else. And he's based in, I think it's Des Moines, Iowa. And it's, yeah, for anyone who knows that area, it's huge for credit unions. And as our listeners likely know, credit unions are really generally pretty sharp on pricing, right? They don't pay the
Right.
taxes. They have less in marketing fees. Like they could probably shave 100 bips off a loan that retail just the structure of it can't really compete with. So if you're an ambitious loan originator in Des Moines, you probably don't want to go toe to toe on price and use that as your value proposition, right? So Tyler, I think pretty early on figured out I want to be good at service. I want to make sure that I'm really delivering like exceptional white glove service, that I'm doing everything I can possibly do to make sure that this borrower feels like they had the absolute best champion on their side when they're going through like what is, even for a lot of refis, like a stressful process. Like I do this for a living, and when I got a house in 2021, like I was nervous. It's nerve wracking, right? And so
Yeah.
so that's the value prop, and that's going to work in any market that you're in. And to cut a 20-minute presentation down to three, basically he says, like, when I looked up who should do my vasectomy, I asked my friends, I asked people on Facebook, I got a lot of commentary, I got a lot of people who had opinions about it, and the top name that came up was this guy who had like a 2.1 star rating. And well, that's not very reassuring, right? So he keeps Googling, which a lot of people do for a lot of different things, even ordering buffalo wings, right? And then he finds this guy, and he ends up going with this guy, and he had this epiphany at the moment, like, oh, this is exactly what my customers are doing with me, right?
Mm,
And so if you have a lot of credible people, real people who put real reviews, and also don't sugarcoat it and make it seem like a promo, right? Like there
right.
should be like, not everybody's going to get the most amazing service, right? There are so many different types of people. And, Tyler even brought this up. Like he had this 1 star rating where, someone felt like he didn't do a great job. And there was a language barrier issue with one of the borrowers. And what does he do? He comments and he says, you know what? I'm really sorry. And that's unfortunate. Here's what I've done to fix that, so this doesn't ever happen again. And I really appreciate you commenting, because this makes us better. And I want everyone to have the best experience possible. And so, I don't know, Tyler. I don't, we had a very, very brief conversation, but I would bet that this guy's a really exceptional loan officer, because,
Yep.
again, it's the same thing with Sean. You're focused on the experience and the value that you provide the borrower. You're not, if someone's super, super, super rate sensitive and they're going to shop you over like, 1/8 on a point, like that was probably never going to be the best experience for either of you anyway, right?
That's
So,
true.
it's like you got to think about how to be good and consistent over the long haul. And that's a durable business. These guys are going to be in the game in 5 years, in 10 years, no matter what the cycle looks like.
That's so true. Okay, we are halfway through and we've only talked about two people. That's how good this thing was. Let me just
Damn.
tell you.
Okay.
So the next person, Roy George, president of More Lending, fantastic talk. And Clayton and I were at NAMBA and heard him speak, and we're like, we have got to get that guy. That's one of the, we go, you go, we all go to a bunch of conferences, and you see some great people, and we heard him say some things and we're like, we want to explore that more. And so that was an incredible session. I would tell people to go and listen to that one as well. That was like the broker to banker pipeline and
Yeah.
what's
Interesting
different
one.
this cycle. And I think this was one of the themes that we saw too, in probably 3 or 4 different panels, is just the momentum. It shifts back and forth in our industry: retail, wholesale, correspondent, broker. And it was really interesting to hear people's different perspectives on that and what this environment lends itself to.
Yeah. And I think there's sort of like, let's say you're at a small broker shop. often the path to really making it, like really truly, no joke, being a household name in mortgage is you start broker, then you jump to core, like Dell, Mini, and then you get your IMB. That's a really, really, really hard path. I think
Yep.
people sometimes forget just how challenging it is to get to the, even just having warehouse lines, right? And like the net worth requirements, the compliance, all the bookkeeping. You can be an amazing originator. You can be a phenomenal salesperson, but running a business like that, it requires very different skills, and not everyone has it. And you know, in a lot of cases, they'll end up at a place. And Roy's doing kind of an interesting hybrid model where he's like, I want these people to come to me, and I'll teach them how to do these things. And if they leave, like that's fine, that's okay. But I believe that I can offer them the compliance work. I can offer them the bookkeeping, and they can focus on doing what they do great, and they'll grow with me, and they'll make a lot of money, and we'll make a lot of money. And I don't think they'll leave, and maybe one or two will go, but I believe that you can really develop an awesome business doing this, and I hope he's right.
I hope
uh,
he's right too. I did a panel with Nate Clear, who's the president of First Funding, and
it's a
Wade
good dude. Yeah.
Betts from Empire Financial, and kind of got this from a different angle, right? So we had a warehouse lender on there, and the correspondent that works with them. That was a really, again, it was tackling the same topic from a little bit different viewpoint, and I thought it was very interesting.
Yeah, and look, it's not for the timid, to make that leap from broker to core, to having lines is just, it's scary, and the risks are pretty great, right? So I think hopefully he's figured something out, and we see more top broker shops go that route. But I don't know, it's a little early in the game, right? We might not even see the wholesale channel make the Matt Ishbia's goal of 50% market share for another 20, 30 years, but that's one potential path to kind of getting there, I guess, in a circuitous fashion.
So that brings me to my session with Greg Schur, right? He's the managing director of NFM Lending, has been a really outspoken voice for mortgage bankers, for just for the guys out there in the community. And I wanted to talk to him because he has decided to be a voice, right? It was on the pros and cons of building an online community, because he's really decided, a year and a half ago, to just kind of stand up and be a voice and try to make some things change. And one of the things he really wanted to change was the whole idea of like us versus them with brokers and bankers. And so he actually did this with a session with you last year at HousingWire Annual, where he was
Yeah.
like, he said something, you kind of laughed or was like, okay, whatever. And then he kind of kicked off a movement of his own.
Yeah, it was. Gosh, it must have been. It was probably about a year ago, right? At
Yep.
HousingWire Annual, and he said he wanted to retire brokers are better, and that he was going to figure out a way to do this, or something like that. I don't remember the exact conversation that we had, even though we put it on the screen, so I should have a fresher memory here. And so I attended the AIM event in New Orleans a couple weeks ago, and Jonathan Haddad, who's the new president and CEO at AIM, actually got up on stage, and in a pretty funny moment, like ripped off his shirt. He had like a nice dress shirt on, and he rips it off, and he reveals this T-shirt that says "Brokers are best." And so, technically, yes, that is different. And he did caveat it by saying it's not a divisive commentary. It's not me saying that these other guys are crap and you shouldn't use retail. Blah blah blah. It's that we want to be the best version of ourselves, and we want to be the best. And if you're not in this industry to be the best that you can be, then you probably shouldn't be here at all, right? And I think that's a reasonable, fair thing to
Right.
say. There could be other interpretations to brokers are best as well. Maybe the more literal one, which is the brokers are the best. And I don't. I mean,
Right.
I don't want to split hairs here. I think there are a couple of ways to interpret it, and I believe that Jonathan is genuine in the way that he views it. But yeah, I mean, look, Greg's whole point is that we shouldn't be creating division because the industry should have a higher calling, and it should be about banding together and collectively working out like very serious, large systemic issues
Right.
in mortgage that often year to year seem to stay the same or get a little bit worse every year. And, by being distracted by which channel is the best option for the borrower doesn't really help the industry grow and change for the better. And I think that's a fair comment.
I do too. And I mean, I was really glad that we featured him because I feel like we talked about what his goals were and what the business case is for being the person who kind of stands up and says, let's do this better. Let's challenge the status quo within maybe parts of the industry. It kind of puts a target on your back at the same time.
Yeah.
It's really been, he's also, I think, done really well. So I thought it was a really good, very interesting thing. He had more shirts, different shirts now. And I love the vision that he has and that he's like, hey, I'm one dude, I'm one person, but I can make a difference. And he has.
I have a conspiracy theory, which is that Greg actually has a retail company, like a retail clothier company, and he's trying to get some buzz for these shirts. And I don't know, maybe it's like a dodgy tax thing. I don't know.
This is the subtext. Yes. Okay. This is the subtext we needed. I'm sure we'll hear about that.
I'm
Okay.
sure I'll get a cease and desist letter that'll clear that up for us all.
Don't tell me. Okay. Switching to a couple other topics. What the NAR settlement means for IMBs. You got to talk to Matt Van Fossen. I also got to do a podcast with him after you guys' episode, but after you guys' session. But I thought that was really good because he was talking about what mortgage lenders need to know about that. We won't go too much into it since we have a whole other podcast about it, but I thought that was great. And then I really wanted to talk about Bob Brooksmith's session.
Oh. Bob is like a guy, since we're talking about like presidential races and all that, that the barometer of the American public is often, do you want to go to the bar and get a beer with that guy?
Yeah.
Bob is like probably the number one guy in the industry that I'd want to get a beer with.
Nice. No, I can see that.
He's he's a storyteller,
He is. We were in the George Bush library, and he had a George Bush anecdote that was pretty funny. And also just, the topic was, how will the election impact IMBs? And I had him on a couple weeks ago, right? We were talking about that, but boy, things change so fast in this political world. And yesterday when we were having this conversation, it was before the debate, or the vice presidential debate. Right. And, he was like, listen, vice president, he's like, watch it if you want, but VP debates aren't going to move the needle. And it didn't. I watched it because, I'm like that. And
did anyone eat a dog on stage?
No one even mentioned eating a dog on the stage.
Wow.
No, not just in very, obscure terms. So anyway, but he was at both conventions. He's, and NBA is like, as he said, is like, once the election results are final, they have this little bit of time, that transition team, how do you get things in front of, how do you get in front of the right people? And then, it's not just a presidency, but like obviously Congress, they have to make sure that they know all the people who are on both sides, whoever's going to win.
Mm-hmm.
Yep. Yeah, he had some just some great insights. And I think that it was interesting because he outlined, like, if you're in the mortgage business, like he said, he goes, you might have your own personal reasons for voting one way or the other, but let's talk about from the mortgage business side. And, it depends on what you look at, right? Because there's, on one side you have Trump's presidency would definitely be probably less regulation. On the other side, you might have the uncertainty of, the GSEs being taken out of conservatorship. And, we've all sort of, the whole industry revolves around Fannie and Freddie at this point. And so that's a lot of uncertainty to throw into the mix.
And Trump doesn't have any policy positions, right?
That's true. Yeah.
We
on
have
housing, no.
None, and so, yeah, I think that's a difficult one. And he's right in that if you do have Kamala Harris coming into term, I think it's very likely that Rohit Chopra is going to remain, and that he'll probably have, I think, pretty similar policies.
Right.
So it's unlikely that the regulators will say, you know what we need in this world is less regulation.
Right.
Whereas
Right.
I think you have a much higher likelihood with Trump that they're going to have a much lighter touch, as we saw with Kraninger, and I think a more business friendly climate is more likely. However, the disruption of getting the
Right.
GSEs out of conservatorship and then the likelihood that the credit box would shrink even further, I think is a real risk for for an IMB. If you're now, I've also done some additional reporting, and I've talked to Mark Calabria, and I attended CHLA's really excellent uh, session earlier this month in Washington, D.C. And I think it's extremely unlikely that a Trump administration would even be able to get them out of conservatorship until 2027, right? So we still have a couple years. That said, I mean, there's a lot of division, there's a lot of divisiveness that would also occur in January if Trump were to, get back into 1600 Pennsylvania Avenue the minute that he's reinstated all of the Harris officials in HUD and FHFA and every other housing related agency are like the minute they're gone. There is no trend, and so there's going to have that would have a big impact on the markets, and we don't know what he would do in terms of policies. We don't see anything right now that suggests he's looking at supply side issues, which is kind of the genesis of the problem here, right?
It's so thorny. I mean, this
Yep.
is this election is interesting for all sorts of reasons. But when you look at just the housing issues itself, and then they've come up a lot. Okay, so we're running out of time, and oh my gosh, we have so much. I did want to say, you brought up CHLA there. Taylor Stork was just so helpful for us in planning the IMB. He was one of our moderators. He had a great session with Paulina McGrath.
And he put cars under all of the seats. You remember that?
Oh yeah, that's you get a car and you get a
You
car.
got
No.
to, yeah. It was the Oprah. That
But
there were no
he
cars.
was
I felt lied to, honestly.
you're like, where's my free car? I really appreciated him. We partnered with him because we really wanted to make sure that we were getting the right angles on stage and in the different sessions we had. He was super great about that. Pauline McGrath. We have not mentioned a lot of women so far, but we had some amazing
We
women.
did.
I didn't know her beforehand. She is the president of Republic State Mortgage and vice president of CHLA. Super impressed. Loved her. We'll definitely be using her as a source in the future. We had Candace McNaught. We had Sarah Gonzalez. We had Anne Marie Pippin, the deputy director of the
Hmm.
FHFA.
Sasha
You know,
Ster. We had, we had a lot of really awesome people. Aaron
we
Webster.
did.
Wester was there.
Erin Wester did an amazing job. She was talking about, retaining your LOs. So a lot of it, when we were talking about all these different things, LOs have a lot of options, right? We talked about the broker to banker, all the different options they have. And I thought that was an incredible session. Also, Laura Brandio came in and she was Laura is just beloved in the industry. And it's
She
because
is.
she's so positive. She has so much energy. She did a great session. We're talking about women, but I cannot forget Kevin Perania. So were you able to watch that session?
I saw part of it. Yeah.
He referenced the movie Moonstruck, and he was like the part where Cher goes snap out of it and like slaps somebody, and it was just one of those classic Kevin moments because the thing about Kevin is he's such a sharp guy, but he's also super funny.
He
So
is. Yeah.
he's great to have on stage. He is, he'll say really smart things, but do it in a really funny, entertaining way.
Yeah. Kevin's great. And he hits the conference circuit
He
super
does.
hard.
But
He's
I mean, every
everywhere.
time I hear him all the time, but I feel like I learn things. And I mentioned Candace McNaught earlier. She's the SVP of National Sales at Supreme Lending.
Hmm.
Amazing. Loved having her on stage. Yeah, gosh, there's so much. I haven't even gotten to half of the panels we did. Christopher McEntee did a great interview of Donnie Martin from City National Bank. We had who else? Michael Dubeck, CEO and president of Planet Financial Group. We hadn't even
The
gotten
yield
to that.
curve.
So
He talked about yield curves. I mean, wow.
I know. I know. I just have to say. So if you're listening to all this and being like, "Wow, I really missed it," you really did. Like it was amazing. But we do have it on demand. And your excellent, very excellent panel on mortgage M&A, where you had Dan Snyder, the CEO and co-founder of Lower, Brett Ludden, Sterling Point Advisors, and Dan Hansen at Loan Depot. That was a pretty fiery one. I liked it. I thought it was really good.
A lot of Dans in the mix there. Yeah.
It was a lot of
Yeah. I mean,
Dans.
look, there's actually some cause for optimism that there will be more M&A, even though the market is improving because the fundamentals look a little bit better and maybe buyers have a little bit more money and sellers who have been resistant to part with their baby, their mortgage family, maybe now are thinking, hey, it's time for some succession planning. So I think a couple of them believe that we could see more M&A in the next year, certainly than we've had. I mean, I've been clear about this for a while. Flavia and I both expected way more M&A activity in 2023 and 2024. And a lot of them have held on. They had 8 straight quarters of financial losses. Maybe 9 or 10 would have been enough. But yeah, it's good. And I think more M&A activity would also probably provide a really good kind of grounding for the industry. And so they can better, hey, what is this company worth? Right? I mean, it's hard to know
Yeah.
when there are only 15 transactions, right? It's hard to get a comp on that, right? It's almost like God, you got to find the M&A appraiser, right?
Boy, that's true. I thought that was a great session. I had a session with Chris Bixby, who's from Rice Park Capital
He's a smart
Management.
guy. He
Smart
went to
guy.
Harvard,
Well, and what we talked about
just like
was not what
Diego.
you might think of, is because they invest in early stage startups and looking at technology. And he talks to, I mean, so he's looked at a lot of the technology that's out there. He's decided what to invest in. He talks to lenders all the time about what they're doing. And so his session was really about like the lens you should be using to look at technology. He had a lot of interesting things to say about LOs and, should you be focusing your whole business around LOs and LO comp? And yeah, I thought that was really great. We also can't pass over the fact that we had Jeremy Potter, and he was interviewing Mark Trachtenberg, who's the chairman and CEO of Silk Title Company. It was a really interesting session. I think because Mark, I mean, to say, he owns a title company, he's a CEO and chairman of that, is just really selling it short a little bit. There's a lot there.
I do have one point of order here. We have a little internal system on our Slack that notates every registrant, and one of them said Meta World Peace, the president and CEO of Silk Title, would be there, and I didn't see him, so maybe he just came late and I wasn't able to catch him, or maybe someone was impersonating the person formerly known as Ron Artest. But I'm really curious if he was there. So if you're listening to this, please tell me. I would love to interview Meta World Peace about title insurance, what he thinks about some of the pilot programs from some of the agencies, and attorney opinion letters. I think that would be a real fun interview. So
that is amazing. Okay.
Meta, if you're out there, hit me up.
Kurt Carlton, New Western, Bill Packer, Longbridge. I really appreciated them. I already said Sarah Gonzalez of Logan Finance. Amazing. I don't want to leave anybody out because I feel like everybody did such a great job. And yet I'm like, I'm probably leaving somebody out. But I would just say, go look at it because it was pretty great. Anything else that stood out to you?
No, we've got another event coming up in February. So I'll be just back from parental leave. I think it's like the first day back or something. So I need to figure that one out. And I'm super, super excited. It's going to be a lot of fun.
You know what? You're breaking the trend of like people your age not having kids. You're doing it for us, for everyone, James.
But I'm done. I'm calling up Tyler and trying to find out who Dr. Gentlehands is to get my vasectomy.
Dr. Gentlehands.
I'm doing potty training all weekend. Like it's gonna be the end of me.
Well, I certainly hope not. The person I didn't mention was our very own Mike Simonson, who kicked off the day. And what a way to kick it off. He's also going to be in our February event. That's an economic summit.
It's nowhere cold, right? We're doing it somewhere warm.
We're doing it in Dallas. Yeah.
probably warm.
Oh,
Who knows
well,
with the
warmer than
Dallas
when
weather?
you're going to be. I mean, warmer
Yeah,
than New
yeah.
York City. Yeah.
But I mean, you could have like a tornado. You could have, could be hailstorms. Could be anything.
And probably not in February, but it could be an ice storm. I mean, that's true. I don't know.
Final shout out before we get out of here is I want to give a big shout out to
Yes.
McKenna
Yeah.
Clay. She did an amazing job of organizing the events, and it is just a wonderful, awesome, really sharp person. So she's the one who made it all happen. So big shout out to McKenna.
Absolutely. And I just think that one of the things we really strive for, we always try to keep it small. Uh, you know, these one day events, especially, we want it to be sort of where you can know everybody in the room. So like 300 people, that's about right. We can go bigger with some of our events, but like, I don't know. I just thought it was great. Thank you for your help, James, and also for everyone who came, everyone who sat in the audience and talked to us and listened. And anyway, so that's my love letter to IMB because it was so much fun. Thanks for being on, James.
Yeah, thanks so much. Appreciate
All
it.
right, bye.